Last week was marked with losses for the U.S. stock market after the U.S. Federal Reserve decided to move up its timelines for changing the monetary policy. The Fed is now planning to raise its interest rate at least twice by 2023. It intensified market expectations for a rate hike. The U.S. Central Bank has finally admitted the acceleration of inflation rate. Against this backdrop, the U.S. dollar closed last week with a nearly 2% gain. The U.S. dollar index that weighs its value against a basket of 6 major currencies reached the mark of 92.30, which was its 2-month high. This was a sharp reversal from a 4-month low of 89.30 reached in late May. The euro-dollar pair dropped below 1.1900, having hit its lowest level since April. This happened also amid the Fed's plan to cut its quantitative easing program, while the ECB, by contrast, intends to keep the monetary and fiscal stimulus in place until there are clear signs of a strong and sustainable economic recovery. Meanwhile, the British currency posted even more losses as the pound came under pressure from the economic data published last week. Retail sales in the UK suddenly declined in May, while inflation rose by more than expected to its highest level since July 2019 and exceeded the Bank of England's target of 2%. Among other bearish factors for the pound are the rising number of COVID-19 cases in the UK, post-Brexit tensions regarding Northern Ireland, disappointing trade agreement with Australia, and postponement of easing restrictions in the country. As for Bitcoin, it moved above $40,000 last week but failed to hold there. So the price is still holding in the previous trading range, where it has been stuck for a month. This indicates a balance between supply and demand, as bears do not rush to sell Bitcoin, while bulls are hesitating to buy. In the meantime, oil quotes continued to move higher for the 4th straight week. Brent crude was holding above $73 per barrel. Investors are quite optimistic about the demand recovery this summer, as the vaccination programs in the US and Europe allowed more people to travel. On supply side, OPEC agreed to stick to the existing plan of gradually easing production cuts through July. At the same time, one of the dollar-denominated assets came under pressure. We are talking about gold. The price of the precious metal dropped to a 2-month low, having closed the weekly session at $1,764 per troy ounce. This was its worst week since March 2020, after a 6% decline. Market participants could witness how gold and treasury yields began to move in one direction, which is against the paradigm that has been observed for the past few months. You've watched the combined review of currency and commodity markets on Insta TV with me, Anna Kasatkina. Thank you for watching and stay tuned.